Hello, thank you for stopping to watch my video. My goal is to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, and 1099 income earners how to save U.S. taxes legally. I call this the secret of the rich. I'm supposed to go live on YouTube 30 days in a row. Kind of failed at that, but I'm going to do my 30 videos just to let people know. The Spendthrift Trust is legal. It's an IRS Tax Code 643B. Hi, my name is Sally Gimmon, and on April 4th of 2020, my CPA called to say congratulations. I had wholesaled 7 bank-owned properties in 2019, and I had paid off all my debt. I had $50,000 in my bank account for short-term capital gains. He called to say, since I made so much money, my tax bracket went from 22% to 24%, and I owed $94,000 in short-term capital gains. The real estate I was doing had to work with banks and courthouses, and everything was shut down because of COVID. His solution was to set up an appointment with him, get on a payment plan, pay interest and penalties. My solution is take a HELOC off a paid-off house, pay my tax bill, and research how the rich save taxes. It took me 5 months. But in September of 2020, I started both my business and Beneficial Spendthrift Trust with the law firm I now represent. I also asked to become a representative so I can teach other investors in my Phoenix real estate group how they too could save taxes. With the Beneficial Trust, you'll stop paying capital gains when you sell something at profit. You'll stop paying interest income taxes if you're a passive investor. You'll stop paying dividend income taxes if you are in the stock market. You'll stop paying rental income taxes if you're a real estate investor, and you'll stop paying royalty income taxes if you have talent or if you have NFTs. But what I'm doing here on YouTube for 30 days, I'm going to be showing you some of my clients who are saving thousands of dollars in taxes and tell you their stories. Because if they can save taxes, you too can save taxes. I will guarantee you, if you make at least $100,000 in 1099 income, I'm sorry, I cannot help W-2 income earners because when you get your paycheck on Friday, your taxes are taken out by your company. Now, Google says 32% of W-2 income earners have a side hustle, and they're usually 1099 income. So you should still be listening to this. Now, I got contacted by a husband. He and his wife live in Chicago. He is a building supervisor. His wife is a dentist. He saw one of my videos on YouTube, and he's just like, how do we do this? My wife has her own business. I get paid W-2 income. And I said, what's going to happen is we're going to take your wife's income out of your 1040 tax return, put it into the business trust. She will file a 1041 tax return. With your W-2 income, you're still going to file a 1040 tax return. You're still going to take all the deductions. You have 3 children, cell phones, how much you have to travel, everything else on the 1040 tax return. On the 1041 tax return, his wife's dental business, she will save 90% in federal income taxes and stop paying Illinois state income taxes. So we went through the numbers. I sent him the information. Then both he and his wife got on the phone because they wanted to ask some questions. So I'm going to get you a little bit confused because they started this in May of 2025, and it was a major change in Illinois for 2026. So I want to show you how much they're going to be saving for both years. So when they started in 2025, they were making $290,000, the two of them. Her dental practice made $200,000. His W-2 job at the high rise was making $90,000. So altogether, between gross taxes was $54,796. Taking her $200,000 out of their 1040 tax return, saving 90% on federal income taxes, she got to save $30,000. I'm giving you the wrong numbers. This is going to be 2025. She got to save $30,445. On top of that, Illinois state income taxes, corporate income taxes at was $9,665. His $90,000 tax bill went from 24% all the way down to 12%. So in addition to that, they got to save an additional $40,110. So for the full year of 2025, they got to save $85,081. They didn't start until May. So per month, May, June, July, August, September, October, November, December, they got to save $7,090 per month. They could put this back into her dental business, pay off their mortgage, take the family on a well-deserved vacation, give to their favorite charity, save for retirement. She burst into tears because her mom and dad put her through dental school and she had no student loans. They have 3 children, and that what she wants to start doing is start a college fund for each one of her children so they too can go to college for free. Well, I went through all my clients, and because there was a big, beautiful bill, I went through and redid their taxes for 2026 with the same numbers that they had given to me when we originally started. I don't know if they made more, if they made less, or anything else. So still using $290,000 with the information I got. Illinois corporate income taxes went up to 7%. So saving 90% on federal income taxes, no longer paying Illinois state income taxes. She got to save $44,089. Her husband's W-2 income taxes went down from 24% down to 12%. He got to save an additional $44,492. Add those two together for the full year of 2026, they're saving $88,573 they'll never have to pay back, or per month, $7,381. January, February, March, April, May, June, July, August, September, October, November, and December. Now, when you start the Spendthrift Trust, I work with the Benson Financial Trust. This Paul Benson was a Harvard law professor who wrote 5 separate trusts to save specific taxes. In 78 years, not a single trust has ever been audited. We have over 800,000 clients. Now his grandson and great-grandson run the law firm, and they stand behind those numbers. If you get questioned by the IRS, the 5 trust attorneys on staff at the law firm will defend you free of charge. In 78 years, it's happened one time only. The trust was approved, and that they can stand behind those numbers. Now, I also have an affiliate program. Guess what? The husband has contacted quite a few other people in Chicago who are making at least $100,000 in 1099 income. They know that they will save 5 figures in federal income taxes every single year. There's 4 ways to file your taxes. Single's the most expensive way. Head of household, you're divorced and have children 18 or younger living in your household. Married filing separately, and then the cheapest way is married filing jointly. Listen up, ladies and gentlemen, free tax information. Quietly, on January 1st of 2025, the IRS changed married filing separately to match single from 10% all the way down to 35%. If you're married and can do this, please file married jointly. You will save double in the taxes. Now, because I have my affiliate, he has told several other people. He has my link that when he gives them his link, they come to me directly. I talk to them. I have a free 30-minute tax breakthrough session. You just go out to www.thetrustisyou.com/scheduling, get on my calendar. I'll go through how much is federal taxes and how much is state income taxes. Or if you're in Texas, Florida, South Dakota, Tennessee, I don't know the other a few states that don't have state income taxes, you don't need to know that. Again, this is on your timeline. When I originally spoke to this husband and wife, I'm going to be honest, they went. He was going back to Syria. He said, "I'm going to put this on hold." I talked to him in March. He didn't buy the trust until April when he came back from Syria. He's just like, "I should have started this in March. I would have saved even more in taxes." I'm like, "Hey, you had plans. This is okay." My goal is to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, U.S. 1099 income earners, and U.S. investors how they can save taxes. This comes from England way back when King Henry VIII, that famous king who chopped off his wife's heads, decided, hey, I'm going to be a nice guy. I'm going to start the Church of England so I can divorce my wives. Wow, what a swell guy. He started the Church of England so he could divorce his wives, and he went to go tax the lords and ladies of England. They went back to the 12th century, the Magna Carta, and said, oh, no, King Henry VIII, you can't do this. It's contract law that came from England to the colonies while we were still part of England. The law firm that I work on behalf of inherited a trust that's going to turn 365 years old in 2026. We're only going to turn, as a country, 250 years old on July 5th. Yay, United States, 250 years old. I love fireworks. Our current tax structure that we're under went into effect February of 1913. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Well, if they can save taxes, we can save taxes. My goal is to teach this to as many people so they too can save taxes. We have an entire team that will work with you, train you how to use the trust correctly, get you the correct EIN number, answer your questions. You're not out there by yourself. We're not the only law firm that sells the Spendthrift Trust. If you Google, please do, go and Google Spendthrift Trust, you'll see many other law firms. I'm in a JV directory. One of the gentlemen who runs it, his girlfriend works for a law firm that charges $100,000 for a trust, and you must make at least $8 million. My whole goal, because I'm trying to keep this as inexpensive as possible, in my national real estate group, the average person who joins is a 56-year-old individual, a 56-year-old man who's trying to make some money before he retires. You do 2 wholesale deals, you can pay for the trust very easily. Thank you for watching. I'm going to post this. If you have questions, please set up a free 30-minute tax breakthrough session with me. Have a beautiful day, and remember, taxes are due on Wednesday. Take care.